Hey everyone, do the weekly review sooner this week because whatever happens today, it shouldn't really affect my reasoning for next week. Uh, I'll go back to what I posted at the beginning of the week. Thought we had two scenarios, one in which we go up a bit to this AV up combo slash election gap up to the FOMC, then get rejected and go as low as 550 again. Then the real rally starts, and the other one in which we stay kind of low, or maybe even the go for new lows, meaning poke below 450, 550 a bit, and then again the real rally starts. And we're kind of getting a hybrid of that, meaning we topped out at the FOMC meeting or after the FOMC meeting, but we really didn't go to the election gap, and now it's looking like it's trying to go lower for that 550 retest. Don't know if it's going to happen, and it's unpleasant that we're getting this push again after the somewhat dovish FOMC. But it's not concerning. It's just unpleasant if you bought the dip. I bought the dip a bit, but again, not really that concerning. Just some short-term discomfort. I still think we are due a bigger rally. Minimum should be the election gap, and until I see that, I won't turn bearish again. But short term, we can still get that 550 retest. If it happens, it's more likely for it to happen today. But we have a 2-day window, meaning today and on Monday, in which we can get that, and following that, we should see the counter rally. And as things that point to that, we basically have everything. D-vol yesterday wasn't that bad, only 62. We'll see what today brings. Then we have McLaren oscillator, which turned green. And if we do push again, it is extremely likely that we will see a higher low here. And when we do see a higher low, like for example here, multi-leg pullback, and this made higher lows along the way, or something like here. Actually, let's go here. So higher lows, and this is a divergence that is common when this type of thing happens, and that's one. Then we have, oh, not this one, sorry. We have MACD potentially crossing over on the daily. It should get rejected briefly, but same kind of behavior with the higher low on this part here. This is a, if we draw a trend line, you will see the same thing, something like this, while price is making lower lows, and the same thing even if we get rejected here, this will get rejected on the crossover to zero, and then it will make a higher low. Potentially, if we turn green again today, this will be a crossover, which is a bullish signal, and it will cause some buying from technical reasons. Then we have this breadth indicator, which is just counts how many stocks are above the 20-day average, and when we have a crossover of relevant proportions, it gives a signal, which is usually bullish. Again, doesn't prevent new lows later on, but for now we should see the rally coming. And finally, this breadth indicator, in which again we are unlikely to go back towards the lows, and we will likely make a higher low. And this is percentage of stocks above 20-day moving average. Then we have 50-day, 100-day, and 200-day moving averages. If we add SPY on top, in spite of the market pulling back a bit or getting rejected, we didn't see this drop. Even if it drops, it will also make a higher low, which is consistent with the market bouncing, like we have here. We have this divergence as well, or at the which one? This one. On the final lows, we had this. Here we have a higher low. So everything kind of pointing for a bigger bounce coming, and we need some kind of relief for this to go lower. Like we're losing positioning because today is OPEX, and all the pressure that would potentially push down stocks is going away. So if today we get as low as 550, I strongly suggest you buy the dip. Mm, Obviously, nothing is certain, but I think it's a high value dip buy if we get that low. If even if we don't get that low, I still see what I consider to be accumulation. This is cues since the moment we got into this low area and we're building a range here. Again, wouldn't be surprised if we go all the way to the lows, but I consider this to be accumulation if even if this are pushing us down a bit, some of them. This is SPY, this is IVV, this is VOO, and we see stuff in individual names as well, like Google, lots of buying or lots of activity. We don't know if it's buying or selling, but I think it's buying. Microsoft, Meta, and so on. You get the idea. The only thing I wouldn't touch is Tesla. Again, not for necessarily political reasons, but it's a toxic asset at the moment, and don't think it's right uh, touching that. Finally, like the last comparison is with VIX. So VIX poked up a little yesterday. There was also a dark print at the lows on UVIXY. Let's do this. UVIX, which is 2x leverage VIX. This number one print here near the lows. Here, and obviously follow through. But even let's say VIX goes up, then we have SPY. So 30 minutes. Let's do 1 hour. So VIX is very far off the highs. Like it would have to go up 50% to just reach the highs, and SPY is very close to the lows relative to compared to VIX. Even if we were to go back to 550, which relative to yesterday's close would be something like what 3%, 2.8%. Even if that would happen, so let's say SPY gets equal lows, or even goes slightly lower. Let's say we get like 3.5% or whatever the fuck this is, so 3.6%. Let's say we get a 3.6% day in SPY. I highly doubt that we get 50% on VIX. I think we get like 15, 20% even on in the worst case scenario. So while SPY is making a lower high, a lower low, sorry, VIX is making a lower high. So this is also a sign that we this is the kind of divergence we want to see when assessing a bottom, because as I have said many times in the past and also shown, VIX, the market likes to bottom on the second VIX spike. So if we add SPY on top of this and we invert it and go like this, so this was the intraday high on VIX. The market went lower, and when the market went lower, VIX was lower. VIX was here. Uh, Another example, let's see, 2020 bottom, 2022 bottom. So this was the top in VIX here, and the market retested it, but VIX was lower. Same here, where here. Top in VIX, market went slightly lower, but VIX only made equal highs and actually closed a bit lower. So this is the kind of behavior we want to see for the market as well. For if we get 550 today, it would be a godsend. Like I'm going big in longs. I have like 25% cash still, and I will probably be deploying all of that if we get to 550. If we don't get to 550, I'm buying some more of what I bought already. Let's say we do something like here, like 555, 556. This is also plausible that we stop here. But let's say we go to 550. 550 is a 100% dip buy. Everything is pointing towards a bigger rally coming up, and until I see the AVU up tag from the top at a minimum, I won't be convinced that we go lower. Once we hit this, we'll start reassessing and looking for topping behavior. But given how big this drawdown has been and how fast it has been, we'll do a bigger recovery rally. And I think that the real target is the yearly open. Plus, this would be, let's say, good behavior for how a new leg will start. Like we go all the way to the yearly open. The yearly open rejects us as it's a big level and is saying, no, this year will stay red. And then we have a big push, a very fast big push into the next leg. But we shall see. Another way to assess this is through the Fibonacci retracement. And if we look at that, the 50% level would be the target. And 50% is, in our case, 580. So I'll add more nuance to the previous statement that we go to the yearly open, even though I think that's the main target, which would be 38% retracement. The minimum I would like to see is 580, this 580 area, with potential to go to the yearly open, which I think we will. But the minimum we should see is 580 for a full bounce, which relative to the lows would be almost 6%, which is decent. For now, the whole bounce was 4%, which is on the low side. I don't think that's good enough. It's more like a double bottomy kind of thing. We go down again, and then we go up, and we actually double this range. So let's say this was the initial bounce with a bit of an overshoot here. So we should see double this range when we break out above it, which also puts us almost exactly at the yearly open. Yeah, so this is it. That's the reasoning. Uh, like I said, unfortunate but not concerning. It's actually a deep buying opportunity. The lower we go today and on Monday, the better for the deep buy. Have a good one. Bye bye.